A very good morning to our respected corporate dignitaries, our trustee sir, Mr. Ashish Mishra, our respected director AIMSR, Dr. Sunita Srivastava ma'am, and director ASPM, Dr. Manoj Kumar Bhatia sir, all our beloved professor and my colleagues. I'm Shraddha Mishra with along my co-host Twisha Shah take immense pleasure to welcome you all to the Finance Conclave 2022. So let us start the event with Ganesh Vandana. It's a pre-recorded video of Pooja Devadiga, one of our senior students from the MMS batch who has rendered it on saxophone.
Twisha, the audio is not playing.
Thank you, Pooja, for the beautiful start to the Finance Conclave. I would now like to introduce our respected and our beloved Director Ma'am, Dr. Sunita Srivastava Ma'am. Let's take a quick look at her journey so far. She is not only our director but also our mentor as well as our professor. She encourages the students to push to their limits. She is there with each and every student at every step to mentor them. She has an ocean of experience in the corporates which she has always tried to teach us. A widely traveled management professional with more than 38 years of experience in various capacities as director, dean, professor, consultant, and corporate trainer. She spent her childhood in Boston, USA, college education in Punjab, followed through by an MBA from the University of Nairobi and PhD from Rajasthan. She was awarded Best Professor in Marketing by ABP News in July 2017 and awarded Top 50 Women in Education Leader by World Education Congress in 2018 and awarded as Fabulous Global Education Leader in 2019. She was featured in an interview taken by Navbharat Media Group in 2020, which was one of the most viewed videos in Navbharat Vibes series. She was awarded Honorary Doctorate D.Lit by the University of Central America in February 2021 for her accomplishments in promoting education for establishing a just and an equitable society. In 2021, she has been invited as a speaker at INTCON, Industry Academia Conclave, organized by IMC Chamber of Commerce and Industry, and also at Higher Education Leadership Forum, organized by ASMA and Microsoft. In 2022, AIMSR signed the MOU with MySalt app and inaugurated a finance lab at the institution. May I now request ma'am to please address us.
Thank you very much, Twisha, for those kind words. Good morning to all and a very warm welcome to the Finance Conclave 2022, organized by the Finance Club of Aditya Institute of Management Studies and Research, as well as Aditya School of Business Management. It gives me immense pleasure to extend my sincere felicitations to all those who are present here on this wonderful occasion. Honorable Chairman and Founder Trustee, Dr. Harish Chandra Mishra ji, respected Trustee, Shri Ashish Mishra ji, all our esteemed speakers for this morning, the keynote speaker, Mr. Chandrashekhar ji, who is the Director at Practus Advisors, Mr. Nilesh Lele, the guest of honor, all our other wonderful speakers, Mr. Shashvat Rai, Mr. Joydeep Sen, and Mr. Srinath, together with my wonderful colleagues and enthusiastic students. I would like to take a few minutes to share a few of AIMSR's achievements and activities. In 2021, AIMSR was ranked number 7 among the top 20 private B schools in Mumbai according to the Times B School Survey 2021. In the month of June 2021, we celebrated 10 years of contribution to management education. So AIMSR is 10 years old last year. In December 2021, there was an added feather in the cap of Aditya Institute of Management Studies and Research in the form of accreditation by NAC. We are now an institution which is committed towards rendering quality and making sure that quality is sustained in all the practices that are run by the institute. The institute believes in learning by doing. Our students take up live projects. They work on live assignments, which they get from the industry. That enables them to not just sharpen their managerial skills, but also to become aware of the real life corporate and social issues. We give them an access to a rigorous academic schedule, in addition to numerous digital databases, which are available for them to access round the clock. In today's times of globalization, as an institution, we believe that partnerships in learning, teaching, and research are extremely important. We have tie-ups and collaborations with foreign universities, wherein we have signed MOUs with Lincoln University, USA, SSM, Switzerland, NI, Spain, and Paragon International University, Cambodia. We are institutional members of MDSA, IMC Chamber of Commerce and Industry, ICIB, CII, and many more. As an institute, we are very proud to say that we have attracted several recruiters on a regular basis. These recruiters span across all industries, starting from FMCG to telecom to banking to media and IT. We find that our students have evolved to an extent where our alumni have reached senior level management positions in the industry. The entire campus is always abuzz with energy and with engagement of student development activities organized through various clubs. Today's Finance Conclave is also one more added example of a club organizing and implementing a conclave with a contemporary theme, Fintech, opportunities and challenges. There was a lot of deliberation that went behind this. The faculty members, together with the students, sat together and came up with this wonderful theme. I'm sure we are all eagerly waiting for the experts to tell us about the numerous aspects of how technology has impacted the finance industry. We are looking forward to the views and opinions of all these esteemed speakers. And once again, I would like to extend a very, very warm welcome to all those who are present here for today's event. I hereby declare the Finance Conclave open. Thank you very much.
Thank you, ma'am, for your most encouraging and inspiring words. We always value them. Now, to introduce our keynote speaker, Mr. Chandrashekhar Sir, Founder Director at Practus Advisors, a brief about his career journey before we invite him. After completing his bachelor's in accounting, Sir went ahead with master's in finance from NMIMS. He started his career at Coca-Cola and worked for over 4 years as a finance controller. Sir has a rich and diverse experience of over 3 decades, has worked with several MNCs and provided strategic guidance and funding to several startups. He worked with Alliance Trier Group, was responsible for the group finance, IT, and was involved in a successful acquisition of off-highway business in USA. Sir has worked with Polycab as president and group CFO. He turned the company around with an increase in EBITDA by 400 basis points and PAT by 4 times. He was an executive director of Runwal Group, where he was responsible for business operations, finance, and ensured smooth completion of projects. Presently, Sir is the founder director at Practus Advisors. He brings business and financial mentorship to a young and passionate team while ensuring successful implementations. Sir strongly believes that price is what you pay, value is what you get. May I please invite you, sir, to address the gathering on the topic and overview of fintech industry in India.
Thank you, Shraddha. Can I share my screen now? Good morning, everyone. I would like to thank the chairman and founder trustee, Dr. Harish Chandra Mishra, the trustees, Ashish Mishra and Aditya Mishra, Dr. Sunita, and my co-panelists. Let me I have a confession to make at the very outset. I am not a fintech expert. I'm just an executive who's used technology, a CFO and a CEO who's used technology in my life, and seen the benefit of technology in everything that I've done. One of the things which I realized when I was a CFO in Coca-Cola Northeast was that every evening, the trucks would come back after having delivered crates to various outlets, and they'll bring in so much of cash. And I had an accounting team which would tally the cash, tally the receivables, tally the uh, amount pending, etc. And the solution, there was no technology at that point of time. The only solution was putting in more arms and legs. At that point of time, I was thinking if you could have some kind of a handheld device which would reduce the pain points. It perhaps was a little ahead of time, but 5-6 years down the line, Coca-Cola company actually went out and implemented it. And suddenly, where we are looking for people to do the counting and reconciliation, the whole thing became so smooth. So really, finance technology, fintech is nothing about using technology in everything around finance and commercial activities. So let me just start with uh, a bit of a background on what this is all about. I hope you can all see the screen.
Yes, sir, it's visible.
Yes, sir, it's visible.
Okay. So what's really fintech? It's nothing but use of technology in all kinds of financial transactions, right? Essentially, it is to help companies, business owners, consumers, and individuals to manage their financial operations, processes, and make their lives that much easier. Some of the examples of fintech are mobile banking, mobile payment, crowdfunding, cryptocurrency, where we talk about it, and we do not know what's going to come in the budget today on cryptocurrency, insurance, regulation, and trading, and wealth management. To put this in perspective, the global scenario, a lot of funds have been going into fintech. And I see this as a trend across decades that I've been tracking businesses and investments. There used to be the dot-com boom and the bust, and every single um, new technology or new innovation gets a bunch of people following it. Some are successful, some are not. But fintech, I believe, is here to stay. From $18 billion in 2017, it's about $131 billion today. 144% growth just in year 2021. What's actually quite pleasing and satisfying is that India is among the top five countries in funding in 2021. Out of the $100 billion for these countries, India is about 10%, with US leading the way. And the segments where money is flowing is bank tech, the prop tech, insure tech, and invest tech. I'm just placing all this in perspective. The topic today is opportunities and challenges. So I want to place these broad picture. So before I go into the opportunities and the challenges, and I have co-panelists who are probably masters in this entire segment. So probably I'm laying the base for them to add further value to what we know about this industry. From an Indian landscape perspective, the market opportunity today is 100 billion, expected to triple in 5 years' time to $300 billion. It's the third largest fintech system globally. India's got the highest fintech adoption rate globally. A good thing and a cause for concern is that the fintech is based in the five metros of Mumbai, Delhi, Chennai, Bangalore, and Hyderabad. That's also because of connectivity issues, talent issues, and possibly fire in the belly issues. Uh, in the last 5 years, India has had 19 unicorns, fintech unicorns. Unicorn being an organization with a valuation excess of $1 billion. Now, this is very, very interesting. The retail digital payment transaction in India is about 2.1 trillion. Now, to put this in perspective, India is a 2.7 trillion GDP economy, and the Prime Minister wants us to take it to a 5 trillion economy by 2025. So when you look at the size of the economy, the digital payment ecosystem is already touched 2.1, so almost 70% of the GDP today. And as we go forward, this is expected to really explode into a much, much larger value. Today, digital payments are 70% above the pre-COVID levels. Again, from a funding perspective in India, from 4.2, it's gone to about 10.6 billion. It's a 242% growth over the previous year. And following the global pattern, payments is 53%, alternate lending, investment tech, insurance, etc. are the other segments where the funding is coming in. Now, what's interesting is in 2021 alone, we had about 10 unicorns coming up. There were two in up to 28, two in 29, three in 20. And this year, last year was almost about 10 entities, and 22, I wonder what that number is going to be. What are the trends here? Clearly, personalized banking services. Um, I remember a few years ago going to a bank, be it PSU or even the private sector banks, without naming them. You would need to go, you need to be physically there along with the other people who want to open an account, half an hour to an hour minimum, if not more, for you to even go through the paperwork. Because I was somebody who had a banking relationship. The time taken to me would be less. I'll spend time with the branch manager's office rather than out in the general crowd. But still, it took a lot of time. Today, when you look at a personalized banking services, when you see a public sector bank advertising that you can open in the comfort of your home, in the comfort of your laptop or your mobile, in 5 minutes time, a banking account, that's a paradigm shift that has happened. And that really defines what this fintech industry is all about. The last couple of decades has seen a lot of investment. Post 91, when India liberalized, a lot of middle class, there's been a merging middle class, and a lot of middle class have gone into other investment options beyond the traditional investments options of real estate and gold. And the equity investors are flooding in, which is where wealth tech is coming into play. Embedded banking is the latest trend that's happening. According to an Accenture study, banking services are disappearing and SMEs will use all of these services with new apps coming up virtually every day. Essentially, the entire financial environment has changed to going out there and standing in queue or waiting or whatever, to everything happening in the comfort of your home or your office. So that's one thing which happened in the last decade in terms of movement, which is why this trend is so important. What are the growth drivers? Let me start with the government initiative. There were two fundamental shifts that happened in the last decade or so. The first one was when the government said, look, let's do a demonetization. Let's make this a less cash dependent economy. At that time, there were a couple of companies which were already trying to provide these services. They got the wind beneath their wings for them to start flying. And when the government said Aadhaar is going to be the basis of all the funds which are being given by the government in the form of subsidies or giveaways, that was the second boost. The third boost really was saying every Indian needs to have a bank account. So this Jandan Trinity, JAM Trinity as they called it, really helped open the floodgates for growth of the digital India. And COVID only accelerated it because suddenly you couldn't go out of the house, so you had to do everything from the confines or comfort of your home. So that was one major boost to the industry. The second thing which happened is the internet penetration. Now, virtually everywhere you go, and I've traveled the length and breadth of this country, there's hardly a place where there's no internet connectivity. Now, the quality of the connectivity may be very different, but the connectivity exists. And today we have, on the population of 135 crore Indians, 85 crores population are internet users. Out of this 85 crore, about 45 crores are into fintech and using the net for their financial transactions. And to put this number in perspective today, it's 85 crore fintech users in China. And one of the studies says that it'll take about 5 years for us to reach that 85 crore number, by which our population could possibly 150, 160 crores. And if you have 85 crores of fintech users, that's something which is going to fuel the growth. Post 91, India has added a significant amount of middle income and this middle class and the high income and the high income households. And by 2030, we'll have 140 million middle income and 21 million high income households, all of which is going to move into fintech. MSME adoption is there, but still a long way to go. But today, everybody is focusing on this segment. And importantly, the urban India and some parts of the rural India are also becoming aware of the tech capabilities for their financial transactions. And if you look at the opportunities and the market size, I just talked about 2.1 trillion today. It's expected to go to 95 trillion in terms of digital payment. This is Jefferies 2021 report, and the CAGR is about 27%. Digital lending is expected to go to 350 billion, insurance 250 billion. These are the three big drivers of fintech growth in the country. Again, let's look at where we stand in terms of opportunities. We have just about scratched the surface, in my view. Unbanked population today is 15% in India. US is just 6%. This number was much larger in 2014 when the nation decided to go with a bank account for every Indian. SME with credit access is still only 20%. US is 87%. India is one of the least insured country, 3.7%. And as a CFO, I've seen this way too often in terms of how the whole insurance penetration, and therefore the insurance cost was so low for us, whereas US is 4 times us. Mutual fund penetration, we are just about 12%, US is at 75%. So this just tells you what the opportunity is and where in India, I believe this is a sustained long-term growth story. Now let's talk about what are the challenges, which is really the key of this conclave. Data security and privacy risk. This is an ongoing challenge. And for every new firewall that you build, there are 10 others who are good at hacking, who are finding ways around. So this is a constant game of one-upmanship, of getting better security and making sure that you're ahead of the curve. In the past, security used to be behind the curve. Now it's kind of moving ahead of the curve. But this is still a challenge because for every rule that you have, you'll have rule breakers aplenty. The adoption rates, though it's moving up, it's still got a long way to go, given the diverse nature of the country, given the large rural population. That's where that's a challenge which we need to meet up. Rapidly changing regulations. I'll give you two very distinct kind of regulations that have come up in the recent past. One, all of us used to have um, for Google, for Apple, for everything, we had given a standing instruction. A few months ago, RBI changed it. And suddenly that became very difficult and all your standing instructions kind of went by the wayside and you needed to go out clear every time. On the other hand, people like Visa said up to 5,000 rupees, you can tap your card and get the transaction without a second or a third authentication. Now, if you look at this, from a fraud perspective, somebody steals a card, does 4 or 5 transactions before the card owner even knows about it. So potentially a risk of 20-25 per person, multiply by the number of users, then you have a very, very large risk lying there. Lack of financial literacy and awareness that's slowly disappearing with the spread of the internet, with the spread of technology, but that's still a long way to go for us to overcome. One of the things I see as a very big challenge is really this combination of managerial bandwidth, process orientation, and talent acquisition. Today, ideas rule. So somebody out of engineering college, some management college, and certainly a lot of you from Aditya Institute, once you graduate, or maybe even now, you're bursting with ideas. An idea with a pilot that works gets into several levels of funding before it becomes a unicorn. Now, typically, when an organization grows, what you focus on is the business. What you focus on is getting to the customer, focusing on making sure you're expanding. Now, once you reach a certain critical mass, is when you realize that there is a need for processes, there is a need for better management, and more importantly, there is a need for a talent. Instead of a churn of talent, you need to make sure there is an ingrown talent. A few days ago, I read that all the startups are looking at CXO salaries next of 2.5 crores. Now, that's a sea change. But today, with flush with funds, you can acquire talent. But this is where I think we, as an educational institution, also need to make sure that we have the right knowledge base, we create the right skill set, and also process orientation, so that when the organization grows, along with the growth, we are also able to uh, put together a very firm guide rails on which the organization can grow. And this is a challenge which several startups are facing, which even the unicorns today are facing. And this is something that needs to be tackled. And obviously, there is a solution to every problem and every challenge. And Madam Sunita, I think possibly we should look at a course within the institute in terms of how do you create this backbone of process orientation and management, especially for the fintech segment. And we have several panelists here who who can certainly help us in this direction. And I certainly would be quite happy to be involved in this. Now let's look at the job opportunities. This is growing at a very, very rapid pace, right? Uh, RBI expects higher adoption, expects employment growth to fuel this ecosystem. Team Lease recently came out and said that there are 3 lakh new job postings in 21 and 50,000 are fintech requirements and 70% are freshers. Now, one advantage of freshers is that they come in with a blank slate. You can mold their thinking, you can mold their capabilities, you can mold their knowledge so that you're creating an ecosystem of people who will do what needs to be done. The top 5 fintech postings have been in IT, ITS profile, 6,000 count, financial services, 5,000, marketing, etc. If you look at Naukri.com, 1,23,000 job count. So clearly there are fintech job opportunities. And as said, Aditya Institute can actually start looking at how we can monetize this opportunity from the institute perspective. To conclude, what I believe is going to happen is this segment is going to grow at a very, very rapid clip, right? It's going to grow beyond all the growth rates we have seen in various other segments. After all, the comfort of sitting in your house and opening your bank account, doing your investments, doing your insurance, everything is so incredible that why would you want to go out and stand in a queue or wait for somebody to service you, right? And more importantly, whatever gaps are there in the delivery mechanism will get addressed. The costs will come down, and banks are increasingly saying, why do we need so many branches? And the private sector banks anyways are actively looking at the number of new branches and the value that the branches provide. So doorstep banking, mobile banking is really the way to go. Mobile insurance, mobile investments is the way to go. And in doing this, the whole ecosystem is going to become a lot more efficient. The quality will get better and the effective cost will be so low that everybody in the value chain stands to gain. Traditional technology will get married with the financial models, which are changing every day. And more importantly, there is a creation of a more diverse, secured, and financial services landscape in the coming years. So I think this is a tremendous opportunity, challenges notwithstanding. This here to stay, and how we adapt, adopt, and more importantly, reap the benefits of this as an institution is what this whole story is about. Thank you very much for this opportunity. Do reach out to me if you have any queries. And once again, it's been a pleasure talking to you. Thank you very much.
Thank you very much, Mr. Chandrashekhar ji. I think that was tremendously comprehensive. You have laid the foundation for today's conclave by highlighting the different aspects of India's fintech industry. With this overview, one thing which comes to my mind as a question, if you permit me, I would like to ask this question. The query is related to what is your opinion about the way in which a general common consumer is getting empowered on account of fintech? Is that a plus point or a negative point for the industry?
Ma'am, I think that's the best thing that's happened to us as consumers. We are no longer at the mercy of somebody else. As I said, the comfort of your home, the comfort of your laptop, the comfort of your tab, the comfort of your mobile, you can achieve a lot more. And those service providers who have created the capability are the service providers you're going to gravitate to, right? I mean, if you can open a bank account in 5 minutes without having to go through all of those pain points, that says it all. Okay, if you can go and trade, and today several people, lakhs and lakhs of people are actually doing trading. the days of brokers, the BSE brokers from the 70s and 80s is no longer there. Right? People are doing in the country, and that's why you see a stock market splurge. It's 60,000, maybe 58 or 57. That number is incidental. That's been fueled by the common man, by the common investor, right? So to me, this is the best thing that's happened. As I said in Coke way back when I was struggling with counting the cash soil notes, to today, the financial controller sitting there doing it on a fingertip. That's a change. So to me, this is long awaited, and this is going to make our lives even more easier.
Right. Thank you so much for that insight. I would like to express my gratitude to you for spending your valuable morning with us. And it is not just today, but we have been seeking your guidance, your support for years as one of the esteemed members of the Governing Council. So thank you so much for being with us this morning. There's a very, very small token of gratitude from our end that we are going to make available to you at your office, sir. So thank you so much, because it was a pure pleasure to have you open the event.
Thank you very much, ma'am, and all the very best to the rest of the speakers and to the students. And I do look forward to coming to the institute personally in the very, very near future. Thank you very much and all the very best.
Thank you, sir. Thank you. I think the host can take it forward.
We are extremely elated to have with us our esteemed speaker, Mr. Joydeep Sen, sir, Managing Partner, Wise Investor Services. Sir completed his bachelor's degree in commerce from St. Xavier's College, Calcutta, and is an MBA in finance. He started his career as a research analyst in private sector, financial services company, and StartCap Securities. Sir has worked for BNP Paribas Wealth Management as a Senior Vice President, Advisory Desk. He is a corporate trainer providing services like corporate training, finance consulting, wealth management, retirement planning, and financial planning. Sir has authored 4 books. He is a columnist who has written more than 350 plus articles across publications like Mint, Money Control, Financial Express, ET Markets, Cafe Mutual, The Hindu, and many more. He is currently working as managing partner as Wise Investor Services and is a charter member of X Qualify. We invite you, sir, to share your views on today's theme.
Am I audible?
Yes, sir, you're audible.
Yeah, Tavisha, just give me 2 minutes. Adjusting something, just give me 2 minutes. I'll just
No
join.
problem. All right, sir, yeah.
Hello. Hello.
Yes,
Am I
sir.
audible?
Yes.
Yes,
Yeah,
yes,
sure.
absolutely.
So sorry for the little delay. I will start off now. So I'll have to first share my screen. Just hold on. Yeah, I have shared my screen. Is it visible?
Yes, sir.
Yes, sir, it is visible.
Yeah, I will launch it as well. Okay, so good morning to all of you, and thank you, madam, for inviting me. Since I don't have the chat box on, anything happening, you may just stop me and tell me if anything is there. So I will start my presentation now. The topic is the fintech sector, opportunities and challenges. So when I thought of it, opportunities were much more than challenges. In fact, I had to think hard to come up for the challenges, but yes, opportunities are much more, and we will start with that and spend more time on that. So intro for the topic, what is this thing? What is fintech? So fintech, finance and technology. So you know what is finance? About money, and technology is the means of delivering or how money is transacted. Now, if you look at it, oldies like us would know that 20 years ago, 30 years ago, how money used to be transacted, how we used to do business in money. And the way we do it now has gone a sea change, a drastic change we can't even think of. In the sense, 20 years ago, I could not even think of the way finance is being dealt today. So disruption is positive now. There are so many disruptions happening. And disruptive technologies are welcome because they are transforming the way we perform our vital activities in finance. What do we do in finance? We make payments, we invest, we borrow, we save, and do all these things. And this is being spearheaded by a new breed of innovative firms called fintech firms, financial technology firms. What is the advantage of this thing? Fintech, faster service, better quality, and lower costs. So continuation of the same topic. In developing countries, large parts of Africa, large parts of Asia, there are hundreds of millions of people who are gaining bank accounts and vital financing for the first time ever. In India, we have this drive called Jan Dhan Yojana, but otherwise in many parts of Africa, unserviced or hitherto unserviced parts of China, this fintech thing or technology is reaching these services of banks and all to the remote areas. But this still has a long way to go. One is what we can visualize, and there are so many things we can't even visualize today. We will see 10, 20, 30 years from now on. The benefits are evident. We will discuss the benefits are evident and essential. And in the pandemic, over the last 2 years or so, many people were forced indoors, like, whatever we are doing today, online sessions. 3 years ago, I never did online sessions. It was all classroom sessions. So similarly, so many aspects of finance, transactions, servicing, investing, borrowing, have been transferred online. So behavior is changing, and which is being facilitated by technology, and we're talking of finance, so technology applied to finance. So what do people want? People want to transact more efficiently and conveniently. They want access to their money and to information about how to spend and save it. Nowadays, information is everywhere, not just newspapers or digital newspapers or TV channels and all. Anything happening instantly. It is flashed across social media, across messages, and information just flows within 1 second. And access to money is very easy nowadays. My entire bank is a mobile phone. There's an app. I open the app and do the banking. 20 years ago, I had to go to the bank for even a small thing. So this customer experience remains the key driver of fintech adoption. Like when we go to a small shop, even a local chai shop, we pay 10, 20 rupees through some phone app, one of those multiple apps. So this is a behavioral change. It is access, it is convenience and efficiency. And this is being brought about by digital payments. So why is it unstoppable? For customers, it is convenient, it is faster than earlier. And businesses no longer need to worry about having cash on hand, while accounting and inventory management have become much easier. In the sense, cash as in, you don't need to have hard cash. The concept of cash is there and will still be there forever. but they don't need to have hard cash, like sending somebody to the bank and getting that much of money and all those things. All these things have been facilitated by fintech. And the next thing which I foresee coming is that the concept of bank itself may become irrelevant. In the sense, banks will be there, but it will not be a conventional bank. It may not be a bank in the conventional sense of the term. It may or may not even have a physical existence. Like whatever banks we see today, PSU banks, private sector banks, they have a physical existence, a physical branch. In times to come, we may have entirely, digital banks in the sense, in some corner of the country, some remote corner, they may have some physical office for the technology people to sit there and all these things. But we may not have the conventional banking as such. Everything may become digital, everything may become online. So there are certain parts, Africa, China, that things have already become predominantly digital. In the sense, we talk of phygital nowadays. Phygital means physical plus digital. In some parts which were not like, USA or something, even parts of Africa, parts of China, they have become predominantly digital. So gone are the days when people living in rural areas needed to travel several hours to open a bank account. Now everything is on their phone. So as long as you have a smartphone or a laptop or some device, you can just open your bank account and avail of the facilities. And regulation. Now, whatever is happening or not happening, regulation is a key aspect, like crypto. So we all know for cryptocurrency, regulation is a key aspect because governments do not support it, rightfully so, except one country in the world. No other government or the central bank of the country supports the concept of cryptocurrency. Regulation is driving fintech. Just to give you a small example, in India, the government or the RBI don't support all these cryptocurrencies and all, but they support blockchain. So blockchain is technology, and technology is an enabler, and they are supporting it. So in the past, strict capital requirements and other regulations made it difficult to disrupt financial services, but nowadays regulation also has become friendly. So what is the benefit for government? One is key, when the economy is moving faster and transactions are moving faster, the growth is happening better, and there is a trail for the government to collect taxes. Like, again, to give a small example, all these roads, like trucks travel from one part of the country to another. All this collection of tolls and taxes and toll nakas and all. So there was scope for corruption earlier. Now, whatever a truck is carrying or not carrying, everything is digital. That challan is digitized. So scope for corruption also has come down. That is the benefit for government, apart from the economy moving faster. So what's the way forward? Fintech firms initially plugged gaps in the market. In the sense, there are banks and there are NBFCs. NBFCs service clients who may or may not be serviced by banks. Similarly, fintech also, what a bank could not do or did not do, fintechs used to do. So there's something called peer-to-peer lending. Peer-to-peer lending means, like in earlier days, in a known circle, like in a town or village or somebody, people would give loans at a rate of interest and all that kind of thing. Today, that is digitized. There are certain service providers, there are certain websites, website-based service provision, where somebody wanting a loan and somebody wanting to give a loan at a high rate of interest, they can avail of their services. It's a kind of investment for the lender and availing of loan for the borrower. And who would avail of loans from this peer-to-peer financing? People whose profile are not good, so people who are not able to avail of a bank loan. So a bank loan, if it comes at, say, whatever, 10% for a personal loan, through this peer-to-peer, the rate is less, just as an example, 15% or 20%. But from the borrower's lender's point of view, he is getting a good investment opportunity at a good rate of interest. So earlier, fintech would do something like peer-to-peer lending because banks don't do that. As in, banks do banking as such. Now, through evolution, fintech is doing much more. So what is fintech doing now? After achieving a certain scale, the disruptors now are competing directly with the incumbents for their revenues. So as an example, for paying money to you, I can use a bank app or say GPay. GPay is actually a facilitator, a front for a bank account. But apart from bank, I can use some other app also. There are so many non-bank apps which facilitate payments. So in a way, for the payment system, payment facilities, fintech is competing with banks. So they have achieved a certain scale. and now they are competing directly. So companies focused on point of sale transactions amassed a wealth of data, gaining unique insights into the habits of users and profitability of merchants. So nowadays everything is AI. So whatever we see when we go to a website or use an app, so for example, when we go to YouTube, whatever it keeps on throwing at us, that is AI. So AI has been used in fintech also. All these merchants, they have applied it and take advantage of it as to what are the behavior patterns of users, like all this, Amazon, Flipkart, they use AI to gain insights into the shopping patterns of customers. Like when we do a Google, the Google AI will throw us those things which we are more likely to purchase. And fintech also, they being experts in this thing, technology, they are taking advantage of this. So I'll now show you some data and how things are developing, how things are progressing over the years. This graph shows adult population using e-wallets as a percentage of population. So China is highest, China has made strides in this thing. So almost 30% of the population of China use e-wallets. The global average is like approx 15%. So India is little on the lower side now, about 5% or so now. But the scope is much higher. We'll see that data cost in India is much on the lower side, and the government is supportive. And over a period of time, India will make huge progress in this thing. So this is one data, one global comparison, how things are improving. So I will now show you some Indian data. So this is the Indian fintech scenario. So what all is happening? Payment systems, the incumbents are the various firms in fintech. There is neo-banking. Neo-banking as in, like I said earlier, it may not be a conventional bank as such with a physical existence. So it may be there in some corner, some part of the country, some part of the world, but through technology, through my phone or laptop, I'm availing of that service. Alternative lending is like one example I gave you, peer-to-peer lending. So it is like NBFC. So what is NBFC? A non-banking finance company which is offering bank-like services, not exactly a bank, but somewhat like a bank kind of services. They can offer you loans. So maybe a customer who is not serviced by a bank, maybe serviced by an NBFC by giving loans and all these things. So those alternative lending spaces are being taken over by the fintech firms. So I'll show you a host of data now. So this is the forecast by a firm called Jefferies. Jefferies forecast projections how things will improve and go ahead in India. So this is data in million. So 650 million or 65 crore. 65 to 70 crore as of now. So this is 2020, the dark blue thing, and light blue thing is 25 projections as per Jefferies. So from 2020 to 25, over these 5 years, Jefferies is projecting a 8% CAGR, that is compound annualized growth rate. So access to internet, which is now available to 65 to 70 crore people in 2020, is projected to go up to 95 to 100 crore people in India. Just imagine the extent of increase. Smartphone users, now we have 50 to 55 crores, now means even earlier, 2020. 25, the projection is 80 to 85 crore people having smartphones. And this would see this, online transactions. So online as in phone or laptop kind of driven transactions. So this is the projected growth, 22% CAGR over these 5 years on online transactions. So all this is fintech, online transactions. Okay, can be banks also, but yes, banks also is technology. So in a way that also is fintech as in a conventional bank offering an app through which we do transactions, or a fintech only firm as in a non-bank fintech only firm. So this is going to explode. And what is the scale? So this again is in million users. So the comparison is China in 2020, India in 2020, and India in 25. Now 5 years since China also will develop. So what they have in 2020 will improve. But for a perspective, where China is now means 2020, and where India is now. So internet million users, which is now 65 to 70, and they have like 87 to 93 crore. After 5 years, India is expected to reach that level, that figure I showed you earlier, that 95 to 100 crore expected for India. And look at this, India, UK, USA. Of course, population is less there, but we tend to think of the perception-wise. USA is, oh, it's USA and all that. So in spite of population being on the lower side, look at this. Their number of internet users is like so much, 30 crore. Whereas in India, we already have 65 to 70 crore internet users. And penetration as a percentage of population, so where China is today, 60, and where India is today is 49. So after 5 years, India is expected to achieve the level where China is as of now. But yes, in USA as a percentage, it is higher. So population is less, which is why we have like 30 crore users in the USA. But as a penetration percentage, being the developed country, the percentage penetration is higher. Smartphone users, same approach. Where India is today, 2020, and where China is today, 2020. So today it is like 50-55 crore smartphone users, and China has like 82 crore. So in 25, India will reach that level where China is today. Same this thing, smartphone penetration projection. So India from 38% as of now will reach China level after 5 years. So around 56% this thing. And yes, USA is the leader. But yes, USA is the leader, but the scope for growth is higher in India and China than USA because we are developing and they have already developed. Now look at this, mobile data cost. Mobile data cost is among the lowest in India. Now we tend to think of so many things, adverse things about India, but look at the comparison. This bar on my left-hand side is the global average. And look at this cost in US, in UK, and India and China. So India and China are much on the lower side. So population is exploding. I mean, it has been controlled now, but population is growing. Income is growing. So penetration of smartphone, laptop is increasing. So this thing also, mobile data cost being on the lower side, this also will help. So the government has made good progress in this. What the cost was earlier, let's say 10 years ago, and the cost where it is today, we have made good progress on this. And this is the infrastructure, digital payment and e-commerce platforms. So online transactors, number of people, and online shoppers. So this is in million users. So this is like online transactors, FY18, 18 crore people, and online shoppers like 9-10 crore people. So this will increase to 25-30 crore of online transactors and 14 to 15 crore of online shoppers. Okay, now look at this. Among digitally enabled population of India, adoption of fintech platform is among the highest across countries. So I don't know how they measured it, what is their basis, but yes, Jefferies is a known leading business research firm. So they have used this thing, Global Fintech Adoption Index. This index is there, Global Fintech Adoption Index. And look at this. So in India, we are smart. So all the smartphone, laptop and all those things, technology, digital cost of mobile data is on the lower side. So this is where we have already reached. So with increasing population and enhancing wealth and earnings of people, so you can just imagine the future of fintech. How many people in India use mobile payments? 25 crore. So in India, it is 25 crore mobile payment users, much higher than all this Brazil and USA and all. Only China is higher. So China, you know, they have made huge progress. So in China, they have like 80-90 crore of mobile payment users. In India, we are less than China, but yes, we are much higher than these countries like Brazil, USA, UK. And what are the modes or methods or enablers of this thing, digital payments? So mostly UPI. Then we have IMPS, which we get in our bank apps. Then we have debit cards, we have credit cards, we have e-wallets, and we have other means of making digital payments. And how much that has expanded. So FY18 to FY21 and projections 22 to 26. So here, this is CLSA, Credit Lyonnais Suisse. So they are projecting as a percentage of consumption GDP. This is the dotted line. And the percentage of total GDP, digital merchant payments, like when we go to a shop and we pay online digitally instead of a physical hard cash or a check or something. So look at this. Percentage of total GDP from 13% to 20% by 26. And consumption GDP 21% to 34%. And that helps the entire economy. When transactions become faster, people tend to transact more. And when people transact more, economic activity, the wheels of the economy move faster and the entire economy moves faster. So there are so many ways. So as you can see the headline, there are 150 plus payment options. I don't know which are these 150 plus payment options, but yes, it must be there. So like we just saw, there is UPI, there is net banking, there is credit card, debit card, mobile wallet. This we will see now, BNPL. BNPL stands for Buy Now, Pay Later. So we had EMIs earlier also, 20 years ago we had EMIs, those used to be the physical, and now everything is turning digital. So pay with points and so many options we are getting nowadays. So access through desktop, laptop, mobile, Android, and so many applications are there which we are using and which is set to increase. So look at this, BNPL payment. Now BNPL is different from credit card. Buy now, pay later, it could be EMI, it could simply be a deferred payment. So look at the projected increase by Jefferies, FY21. So loan disbursal by GMV. GMV stands for gross merchandise value. So loan by GMV in FY21 was so much, and FY26 projection is so much, which means they are encouraging consumerism through this mechanism. As in, if you don't have money, doesn't matter. If you want to go on a foreign holiday, I mean, after lockdown, I'm saying, lockdown is over, so you want to go on a foreign holiday, don't have money, okay, you travel now, pay later. That kind of thing is developing nowadays. You want to buy some electronic, whatever, mobile phone or TV or anything, you don't have money, you pay later. And this, what I'm saying, pay later is not just the credit card thing. I'm talking about things other than credit card. And this is the explosion, the growth projected in this thing, BNPL market. And the projected growth is even higher than credit card. So look at this, FY21. So this dark blue is credit card and light blue is this BNPL users. So now FY21, it is like so millions, so 3 to 3.5 crores of credit card users and 1 to 1.5 crores of this thing, BNPL users. And this is set to overtake. So we will have 8 to 10 crore of BNPL users and 7 to 7.5 crores of credit card. Now, credit card being issued by banks, to an extent, a bank's business is being challenged. So like I said earlier, initially fintech starts as a disruptor, as in whatever somebody else, a big boy is doing, they start doing this thing, and then after attaining a scale, they challenge the main business, the big boy themselves. So this is what is happening. So BNPL, let's say there is a finance company, NBFC finance company, there are so many around us. So they would say, you are buying something, you take finance from us, you don't have a credit card, does not matter. And there are some people who are even saying that there is zero cost EMI. Now think of it practically, what is a zero cost EMI? Everybody is doing business, so nobody is here for charity. So zero cost EMI means you may not get the discount which you otherwise would have got. So that discounting cost which you are discounting aspect which you are foregoing, that is in a way the earnings of that NBFC or the provider. But yes, that is a BNPL thing, and that is expected to grow as much and overtake credit card users. So this is the projected share of the consumer internet market. So as of today, we have this much as per Jefferies. BNPL, like we said, this is the quantum in USD billion, online credit card based payments, credit based payments, and consumer internet market. This is the total pie, and this much is BNPL. So by 26 projection as per Jefferies, so BNPL will have a larger pie of this thing. So how does it help from a macro perspective? When people consume more, others produce more. So any gadget which I'm purchasing, if I don't have money, I'm using BNPL. Somebody is producing it. And when somebody is producing it, the economy is growing. SME space, SME as in small to medium enterprise. So SME credit in India, total demand is so much. So MSME credit is this much, borrowing in proprietor's name is so much, and credit gap is this much. So why is there a credit gap? The credit profile of MSME sector is not as good. So banks who give loans would prefer to give loans to say large corporates or retail people like you and me, or the mid segment, SME segment also. But on the lower end of the ladder, the smaller ones, the risk level is higher. So there are those microfinance institutions who give loans, and banks may not be very willing to give those microfinance loans. So there is a credit gap here. So how does fintech come into the picture? With fintech, there is better mapping, there is better delivery, there's better tracking. So with better tracking and better delivery, fintech also is enabling. So it is like any bank, like or a microfinance institution who is looking at giving small loans, microfinance loans. They can tag and map things that much better. So fintech is helping not just the elite society, but the lower end of the society as well, the base of the strata. Now we come to the other industry, insurance. So look at this, Indian retail digital insurance in $1 billion and digital share. And look at this, FY15, this dot. Digital share was only this much, 0.1%. FY20, it was only 1.3%. And the projection is this much, 20%. So while on one hand, with explosion of digital, online, mobile, apps, and laptop and internet and whatnot, while the overall pie is increasing from this much to this much. So this is USD billion. This is the scale, the size on the left-hand side. On the right-hand side, this percentage is the digital share. So the digital share is expected to increase from 4% to 20% over these 5 years. So again, fintech. And just to repeat, fintech is not just a small or medium-sized company focusing on technology only. Banks also use technology, insurance companies also use technology. So it's the entire thing. So in a way, now there's a competition in technology between banks who are developing their own technology platforms. They're offering us apps and whatnot. There are fintech only firms also. So this is the thing. So this I have taken from a bank this thing. So what they are saying is digital partnership and co-creation. So all these things, payment, affordability, credit, bill discounting, so all these things, easy onboarding, payment, collection, 150 plus partners, into 21 unicorns. And so all these things the bank is saying we have digitized and we are offering digital services. So now in a way, the competition is happening here. A bank being a bank, they have the bank as such with them. So they have the advantage. So they are the big boy, plus they're adopting technology. On the other hand, we have the small boys, fintech only. But the thing is, nowadays, the small boys also are growing. There are so many names around us who use technology only, and using technology only, they have grown, which means they have been able to tap those segments which were so far not tapped by a conventional bank. So look at this, the level of digitization. So for this bank, look at this, 84% digitally active customer. So D2C as in direct to customer. 74% of the credit cards issued is digital. 67% of new SA as in savings account. 69% of fixed deposits opened. 60% of personal loan disbursed. 57% of new mutual fund SIP as in systematic investment plan. So all these things, this is the percentage which they have already digitized. So banks also are in a way competing with digital, as in fintech only companies. So now look at the customer base, and this is really interesting. The customer base as in registered users of Paytm is 33 crore. That is huge. PhonePe. Now PhonePe is in the news for the wrong reason about the promoter, but anyway, look at the work they have done. They have 30 crore registered users. Then we have MobiKwik and GPay and all that. MAU is monthly average user. As against that, look at this, the leading bank. A leading bank has only this much. Paytm has this much. A leading bank has this much. And NBFC, a leading NBFC has this much. And the largest bank in India has this much. So as I said earlier, small boys are growing big. So as a customer base, as number of accounts, SBI has like 44 crore accounts overall. But if you look at this digital and fintech payment, this thing, SBI has only this much on my right hand side, and Paytm has this much, 33 crore registered users. How many people are using it? Over 90% of population of age 15 plus now have bank accounts. This is the percentage on the right side you see, FY21, 91. 91 is the percentage, and this is the number, 90 crore. So today, 90 crore people in India have bank accounts, and this is this thing. So the government initiative of Jan Dhan Yojana helped, but not only that, it is technology also which is helping. So both ways, digital, physical plus technology. So everything is going online. So as an example, HDFC Life. They say, they take it from the website only. They are saying, we are digitizing all aspects of life insurance, product innovation, brand salience, technology integration, customer experience, customer value management. So everything they are digitizing. So now all the providers, BFSI, so bank, financial service, insurance. So the BFSI players also, they are gradually trying to move everything online. It helps them also, their costs come down. In the sense, running a physical branch has a cost. That also will remain because some people need the physical touch and not everything can be done. So large transactions and all those things, large value loans, large ticket loans, that needs a physical listing, a physical branch and a physical touch. But yes, if they have less of physical presence and more of online presence with the help of technology and penetration and low data cost and penetration of mobile phone, laptop, it reduces their cost also. Oh, just a second. Yes, madam. Hold on. Yeah, so I'm almost done. Okay, so India is leading the world in real-time payment transactions. You see how India is leading other countries like China, even comparable countries, China, Korea, Thailand, and all that. So, so many people, 63% of the people applied from a loan from fintech. So people's confidence level also an increasing. Look at this, the transparency level and perceived transparency levels. 74% people are comfortable. So these names, yes, you are already aware. So many names are already around us. You can just see the names. And what are the challenges? Fintech is an enabler. You have to have the basic service of good quality, be it a bank, be it an NBFC, be it whatever. That basic service has to be of good quality. Regulation is supportive, but yes, like cryptocurrency, regulation is not supporting. Burnout rate is high because what we see in front of us, like Paytm we just saw, is a success story. But there are so many failures who lost their way, we don't know. Disruptors themselves can be disrupted. Today, somebody is having a good idea and gaining market share. Tomorrow, somebody else will come with an even better idea. And the disruptor today, somebody who's a disruptor himself or herself may get disrupted tomorrow. And yes, valuation. So valuations are a question mark. Today, we have so many issuances and unicorns and decacorns and so on. So the valuations given by the valuer are a question mark as to what level they are valuing it at. So, so that is my presentation. So, madam.
Yeah, thank you so much, Mr. Joydeep Sen. It was amazing to see so much statistics available, and that definitely gives us the confidence that this industry is there to stay. And as you said very rightly, the challenges are fewer and the opportunities are far larger in number. And that is something which I think, from a student's perspective, the students should keep their eyes open to this as one of the sunrise sectors. So I think we would like to express our gratitude to you for spending your wonderful Saturday morning with all of us. This is a very small token of appreciation from our end, which we will make available offline, of course. And we are looking forward to you joining us offline also in near future. Right.
Sure.
So thank
It
you
was my
very
pleasure,
much.
madam. Thank you so much.
Thank you so much, sir. Thank you.
Thank you, sir, for such an interesting take. We are extremely fortunate to have among us another senior corporate professional, Mr. Sashwat Rai, sir, who is director of Aavishkar Capital. So before we invite him, let's go through his corporate journey. Sir was ranked 53 in the IIT JEE exam in 2003 and has completed his BTech in computer science. Thereafter, he completed his MBA in finance from Indian Institute of Technology. He is a professional with extensive experience of working with cross-border teams, conducting business development in Southeast Asia and closing negotiations for equity transactions for startups. Sir has worked with DBS Bank and was responsible for hand-holding strategic initiatives of global transaction services, including trade finance, cash management, and custodial services. He has anchored the budgeting process for the year 2012, licensed with finance, sales, and senior management to arrive at product-level targets for department in DBS Bank. He is a CFA Level 2 investment professional, which is a global community institute of more than 175,000 investment professionals working to build an investment industry where investors' interest comes first. Presently, Sir is a director at Aavishkar Capital, which is a specialist in early stage investing, venture capital, impact investing, and micro equity investments. So now I would request Sir to take over from here and share his perspective on the topic career opportunities in fintech.
Thanks, Shraddha. Can you hear me okay?
Yes, sir, you're audible.
Okay. Let me just share my screen. So hello everyone, good morning. As Shraddha pointed out, I've been in this industry, the venture capital industry for the last decade. I've made investments in India, Indonesia, Bangladesh, Sri Lanka, and have seen fintech as a sector in close quarters. Right from the formative days of fintech in the country back in 2010, 2011, where a lot of these fintech ventures were actually coming up, starting with payments. And now the ecosystem has prospered quite a bit, right from India to Southeast Asia, Africa. So all developing markets have had interesting journeys of fintech, and the incumbent financial services institutions like banks and non-banking financial companies are getting challenged by fintechs, and they are also trying to find ways and means to compete in this area. So the idea of this presentation is actually to go through specific profiles of fintechs which are out there in the market, and also what kind of opportunities do these fintechs present to young graduates such as yourself. When you are graduating with an MBA degree, there are certain baseline expectations that people have. But in addition to that, there are some specific roles which require people to invest more in building their skill set. So I will be covering some of that as well in the presentation. And finally, whatever insights I have about the career landscape, I will try to crystallize that and communicate it to you. So just moving forward, what is really driving the fintech landscape today? There are significant tailwinds for the industry. There are two big events which happened over the last 5-7 years. One was demonetization, where there was a significant dent in the amount of cash in the economy, and that actually led to a significant surge in adoption of digital financial services. So be it banks or be it new startups, everyone was targeting a digital transformation of the entire financial industry, because after demonetization, the macro environment became so challenging that if the digital transformation wouldn't have happened, the economy would have gone to a standstill. So not out of choice, but out of the macro constraints, a lot of innovation actually came in, and hence now what you see, the level of adoption of these digital wallets, QR codes all around you, affecting your life. The seeds of that were kind of sown back in 2016 when the demonetization event actually happened. And after that, even during the COVID period, the multiple waves of COVID forced people to actually try to find a contactless way of making transactions. And that has given another fillip to the payment sector in general. And a lot of innovations have come along the way. The other macro aspect which has happened is that the business models have actually been changing. The incumbent financial service companies like banks have been facing challenge in engaging with their customers and retaining the customers. There are significant headwinds that they are facing as more and more asset light, lean, technology led kind of companies are actually coming to the fore. So they also have to reinvent themselves. Customer is generally adopting anything digital. Today in India, it was unheard of that in the rural areas, in the semi-urban areas, um, in all strata of the population, the level of adoption of digital means is phenomenal right now. And in general, the e-commerce industry growing brings along a financial services ecosystem along with it. So whenever an e-commerce transaction happens, it needs a financial infrastructure to support the transaction. And given that the e-commerce industry has grown significantly over the last 5-7 years, the financial ecosystem is also catching up that quickly because the demand for the products and services that it brings is significant. So just to take some example, and this is obviously not a catch-all kind of a slide, but it is bringing lots of innovations. There are lots of breakout fintech segments which are coming up, right from alternative lending, where you have companies like Lending Card who are trying to reach their customer base of MSMEs in an innovative way by doing some partnerships, by doing digital marketing to reach out to them, and then doing a credit underwriting in a way which is very non-traditional in nature. So I mean, there are several startups today who look at alternative credit scoring mechanism to arrive at a credit persona. And that is something very novel in the market. The traditional means of just relying on a credit bureau score and underwriting on the basis of the cash flows in the bank statement are no longer sufficient to cater to the widest segment of the population, because the widest segment of the population, there are several people who have never applied for loan. They don't have any credit history. They are very thin file customers in the parlance of a bank. So that makes that segment significantly underserved. And because that segment is inherently solid, a credit solid segment, the startups are the ones who are more agile, and they are able to find their way in discovering ways and means to reach out to them in a cost efficient way, underwrite them, and roll out credit facilities to them. So there is a significant action happening today in alternative segment, to the tune that even the banks and NBFCs have opened their balance sheets because they realize that it is not their strength to reach out to this customer and do a credit underwriting of this customer. So there are a lot of partnerships happening between banks and fintechs today, where banks provide the balance sheet and the fintechs lend. And they use their own expertise in reaching out to this customer and underwriting this customer and collecting the money back from the customer. And the banks are the ones who are actually sitting behind and actually offering their balance sheet. So alternative lending segment is going to go up significantly. The share of alternative lending compared to conventional lending is going to rise up very dramatically. The other big vertical where significant action is happening is consumer finance. You and I, all of us are somewhere affected by this segment. Today, when you try to go and buy some electronics in an offline store like a Chroma or Reliance Digital, you will see that every product, as small as a toaster, will have so many financial options available. You have zero cost EMIs coming up. You have BNPL products that Jayant covered just before this, the buy now, pay later kind of products which are coming up. Bajaj Finance, despite being a non-banking financial company and not necessarily a fintech in the standard definition, has been one of the prime innovators in the consumer finance space in terms of capturing the offline supply chain and plugging in their financial products. And there are, massive companies now building up, like Credit B is one of the leading consumer finance company today, which is doing, again, alternative data crunching and taking instant decision making on consumers, retail consumers, to fulfill the credit needs for buying consumer products. The third big category which is coming up is neobanks. Now, neobanks is a very interesting term. So in some sense, neobanks are trying to create a banking experience in a new age manner for retail consumers and MSME consumers. There are companies like Jupiter who are trying to transform your entire banking experience. None of the neobanks are licensed, so they're not necessarily governed by Reserve Bank of India directly. But what they are trying to do is they are actually trying to create a digital experience with product partners sitting at the back end. So they will have partners like, say, Federal Bank, or they will have one scheduled commercial bank which is a product partner for them. But the entire front end experience, the entire product creation on the front end is being led by the teams of these neobanks. This is a very exciting segment. If you see the app experience of a Jupiter versus whatever bank you are using today, you will see the sea change in the user experience. And the whole focus is that how do we cater to a segment of population with specific products which make sense for that segment, instead of fitting one product to the entire segment. The product managers at the neobanks are targeting specific segments. They are going after that segment, acquiring those customers and giving them an experience which is so superlative that they are likely to switch from their conventional banks to the neobanks for the plethora of options and the plethora of experiences that they will get through these front ends. So neobank is a very exciting area. People are starting to warm up to this concept. Consumers are actually getting their accounts opened as an experiment today. But over time, these accounts are going to be transformed into a loan potential which will increase the earning of these neobanks down the line. And there will be several other financial services options, right from insurance, pension investments, mutual funds. Everything will be packaged into one single unified interface, and with a much more superlative way of running the process of availing these products and creating lots of insights, dashboards for the customers for knowing their financial well-being at any point of time. So this is a very raw new area. Most of the neobanks operating are of 2 to 3 year vintage. So very nascent industry today, but a phenomenal industry to get into, because this is the right time to be entering an industry where funding has already started to come in. They are trying to disrupt what is already existing, and there is significant amount of work to be done. So in that sense, among the top three that I mentioned, the third one is where a lot of new opportunities are going to emerge. A lot of hiring opportunities are going to emerge. A lot of value creation is going to happen. So as a talent, these are the kind of things that you need to look at. What industry is at what stage? If an industry is overly matured, then the value addition potential that you have, the amount of ownership that you can take of projects there is that much limited. But you will, on the other hand, you will have to deal with a lot of chaos because that industry is still trying to discover itself. Fourth, payments. As I mentioned, payments has been phenomenally disrupted. You would have, I mean, Paytm, Bharat Pay, Razor Pay, all these names have become household names today. And purely because the level of innovation in payments in India is so phenomenal that India has actually crossed all countries, whether it is developed countries or advanced fintech developing countries. Idia has really beaten them black and blue. If you look at the level of innovation which has happened at NPCI and the kind of iceberg initiatives which keep coming, the payments ecosystem in India is going to be unparalleled. So this is one of the verticals where if you are able to join, you will be building a value which will be like a global value for yourself, because this has proven out to be a breakout segment in Indian industry today. The highest amount of attention, global attention has come to India because of the level of innovation which has happened in the payments ecosystem by companies like Razorpay, and they provide phenomenal opportunities to grow. Most likely in the next 4 or 5 years, brands like Razorpay will cross borders. They will probably start an Indonesia chapter, they will start a US chapter, UK chapter. Paytm has already started doing that. Paytm has a Japanese subsidiary, they have a Canadian subsidiary. So because of the level of innovation at which they are, their products are going to make sense for developing and developed markets beyond India also. So from that angle, these startups are going to provide you a global opportunity. Another space where a lot of innovation is happening is wealth tech. In the wealth tech space, again, consumers till now were relying on brokerages like ICICI Securities, Kotak Securities to actually subscribe to mutual funds. The level of insights was lacking, the curation of products was lacking. Now companies like Grow are coming up. These startups are giving you a very affordable way of making your personal investments. Not just affordability, but also the level of insights that you get before making investments is of a different level. So the level of analytics capabilities that these companies are building beyond the partnerships, the mutual fund partnerships, is actually phenomenal, and that presents a significant opportunity. Again, this sector is again up and coming. Lots of startups are going to come in here and create significant value, and they are going to disrupt this space like never before. One of the very famous startups, obviously, is Zerodha, which has been bootstrapped to become a unicorn. They have never raised external capital. They've been so profitable that through their internal accruals, they have been able to reach $1 billion kind of valuation already in the market. The next one is Fin Infratech, which is more of a alternative scoring. So there are, when you are actually building financial services company or fintech company, you don't try to develop all the solutions in-house. So for certain solutions, you rely on some third-party vendors, third-party fintech companies who have actually developed solutions which are much more well-tested. For example, today, if you look at anyone's bank passbook to get parsed, and you need to get insight on that, then Perfios is one startup which has established itself on a pole position to create the level of insights required when you are actually digesting, say, last 5-year passbook of a retail customer or a MSME customer, to create the insights on how the fiscal management of that particular individual has been. So they have actually created a pole position in that. So many other fintechs who are trying to do credit underwriting, they are not necessarily writing a bank parsing tool on their own, bank statement parsing tool on their own. They are actually subscribing to someone like a Perfios on a SaaS model. And similarly, there is a startup called Credit Vidya, which is trying to create an alternative credit scoring mechanism. Again, the tool is going to get evolved as more and more users come in. Whenever you are trying to create a data analytics engine, you will be most powerful if you have the maximum amount of high quality data in your system. The more and more users who start using your tool, the better it is for your tool to actually improvise itself and actually create a market domination. So again, on the fin infra side, lots of different companies creating unique tools, right from bank statement parsing to alternative credit scoring to cloud infrastructure management. So infra side also there's a lot of innovation happening. And then the last vertical is the cryptocurrency vertical, where obviously last 5-6 years have been phenomenal. There are a lot of startups coming in India. This is a bit of a dicey segment as of now. There are expectations of government's intervention coming in very soon in terms of identifying what is the legal status of a cryptocurrency investment. But despite the regulatory fixation not being there yet, there are still people who who at least want to participate, because as an early participant in any trading kind of a play, you always stand to gain. So that's why a lot of people in India today are trying to create crypto asset kind of portfolio, and there are a lot of enablers in the middle who are trying to differentiate from each other on the basis of cost or on the basis of analytics that they provide. So these are some of the breakout segments. This is not a catch-all segment. The catch-all segment was mentioned by Jayant. There are at least 7-8 other big areas, but these are some that I thought will be interesting for you to understand on what's going on. Just to move on to key roles for MBAs in a fintech venture. This is my understanding, basis my experience in investments and payments and neobanking ventures in the past. So there are specific roles that that a fintech needs its personnel to conduct for an efficient operation. So, for example, the first role is actually customer acquisition and retention, right? So every fintech needs a customer at the end of the day, because that's where the revenue is going to come from. That's where the scale is going to come from. So every fintech is actually hiring for world-class product managers who can create a differentiated world-class user experience. Product manager is a very, very important role that actually comes to MBA campuses, or people at least approach the fintechs of their choice for these roles. Product manager, just to tell you, is looking for, I mean, it's not something where you need to be a technologist to actually make a difference. You can be a product manager as long as you're imaginative and detail oriented. So if you see a typical product manager interview, it is basically just testing your limits on how much you can imagine, how deep can you think, how customer centric can you be when you're trying to design a particular product for a particular customer segment. So these are very open-ended kind of discussions, and there, the only way where to improvise yourself in a product manager interview will be to actually discuss with your peers. You run a very open-ended kind of a problem. For example, two peers can sit in front of each other and can discuss, say, how do we improvise Facebook, right? How do we improvise Google? What are the specific features which need to come in to improvise XYZ kind of a product in the market, and then brainstorm, right? So these are very open-ended roles. They are not necessarily related to any hard skill per se, but it just needs you to be very imaginative. You need to, whenever you are using any technology product of your own on your phone, you just need to analyze it in depth and create some kind of a view on what would possibly be a USP of that product, and what are the pitfalls of that product, and what needs to be corrected. So product manager, very exciting role. I come from ISB. ISB has been a hub of product managers since the inception of fintech in the country, and these are, I mean, they kind of are similar to consulting kind of roles, but very imaginative, very design oriented kind of roles. So one of the most exciting roles in my view after MBA is a product management role. The second role is of marketeers, people who are very good at digital marketing and in reaching out to customers in a very cost efficient way, doing the virality campaigns in the market. So they are the digital marketeers. So if you're majoring in marketing from MBA, that is the other area where obviously, I mean, this is a core bread and butter kind of a role. Every fintech will need to have a digital marketing arm, and they need excellent people at play there so that their costs are always under control and their campaigns are that much more efficient. The ROI measurement of every campaign is that much better. So that is the digital marketing role. Again, here people choose people who have actually done some projects, they have done some internship, generally speaking, so that they have hands-on knowledge beyond the curriculum-based knowledge. They have some hands-on knowledge as well. Moving on to the next layer, where you have partnerships. So fintechs actually thrive on partnerships. As I mentioned, in alternative lending, you need to have banks sitting in behind. In neobanks, you have banks sitting behind. So somebody needs to build those partnerships in a very cogent way, so that the fintech can actually thrive, and along with the fintech, the product partner can also thrive. So there are business development managers who actually focus on building these partnerships and nurturing these partnerships. It's not just a matter of doing one straight partnership and walking away. It's an ongoing process. For example, let's say you in a neobank setup, if you have a current account partnership with XYZ bank, then can you actually extend it to a savings account as well down the line? Can you extend it to a short-term credit loan? Can you extend it to a BL loan? So it's an ongoing process. You start somewhere and then you try to improvise and you try to maximize the potential of these partnerships. So this is the role of a business development manager. The sales team is who actually drives the business targets, and sales teams are pretty much in some cases they are where you are playing a complete digital play. There the sales teams are very lean, but there are fintech ventures where there is a hybrid kind of approach where technology is assisting them, but you still require salespeople to actually drive specific campaigns who can actually drive the sales volumes of the company. So sales team again becomes a requirement of the fintech venture. The third big area is the data, where data scientists are actually aiming to provide the insights to solidify the tech backbone. So one of the reason why some startups are ahead of the others is because the level of database that they have created is of a different level, and they are able to crunch that data to create rapid insights in a different way altogether compared to any conventional player in the market or the smaller startups who are behind them in that journey. So data scientist is one of the most exciting roles which is coming up. But for data scientists, you need to have specific certifications under your belt beyond the curriculum studies that you are doing. You should also go and do those certifications. You should try and do as many projects as possible, so that an interviewer or a particular recruiter will see an additional value in taking a call on you. So that's something where a hard skill, a real project experience or practical experience will be significantly important. And the last is operations manager. So operations manager, like you would have studied in your MBA curriculum, that operations is all about optimizing throughput, minimizing the process bottlenecks, and that's exactly what is done in a fintech use case as well. Because as you would see, any transaction has so many different legs attached to it. For example, if your third-party API is sitting in the middle, are you able to manage the turnaround time back to the customer in an efficient way, or are there certain breakages which need to be fixed? So operations is always an area which is very core to either a financial services company or a fintech company. So operations managers are people who are extremely process oriented, people who probably majored in operations management in MBA, and that's not a necessary condition, but generally a good to have, because then you are more familiar with concepts like theory of constraints, and you can actually diagnose a particular problem to come up with the root of the challenge. So these are first the 3-4 large buckets in which the hirings are happening today. And just to conclude, a few points that you should definitely consider. Joining a fast-growing early-stage venture can be more rewarding in long term, than joining an existing unicorn. So, these days, everything is, the media is creating all the glitz and glam around unicorns. But the interesting fact is, once a company has reached that kind of scale and valuation, the new joinees in that company don't get that level of ESOP, which is basically employee stock option, or even the responsibility of building something from scratch, because that company is already more mature. So you will probably be part of a larger department where you'll have 20-30 peers working alongside you, and you'll be responsible for a small project in that. Compare that to a very early stage startup. In an early stage startup, first of all, because they will probably not be able to mark a very high remuneration, but they will try to reward you in form of employee stock options. And if this and your level of responsibility will be significantly higher. So if that startup clicks in the next couple of years, the amount of experience that you will gain of building something grounds up, as well as the significant financial reward that awaits you, is going to be significant. So that's why one needs to keep this in mind, that there is always a balance. You should not, I mean, you should join an early stage startup with whom you can relate with, A, on the problem statement that startup is trying to solve, and B, with the founders, you feel that the kind of culture that they have built in the team is very good for you to actually take a call on that. Once you're satisfied on these two contours, then generally speaking, the joining an early stage startup is generally more rewarding for a young audience like you. But you need to validate on these two contours very clearly to actually arrive at the final conclusion. Then the other facet you need to think about is, what is the general skill role versus specific skill role. So specific skills is things like data science, right? Data science, it is expected that you would have volunteered and taken certain certifications, project experience on your own, and you need to be very in-depth into your preparation. You can't expect a data science company to come to the campus and pick you just on the basis of the work that you have done during your core coursework. The competition is very high, and hence you have to differentiate yourself by doing industry projects, by doing industry certifications, and developing a very core hard skill expertise. And that's why it is very important to invest in yourself if you want to aspire for these hard skill roles like data science. The other roles which I specified in the last slide are more general skill roles. But having said that, the other, marketing, digital marketing is another area where a practical experience is being sought. But if you look at business development, partnerships, sales, these are all more general MBA kind of roles where your preparation needs to be pretty much similar to, say, a consulting role or a general MBA interview kind of a preparation. So those are more general skills roles. But specific skills, if you're shooting for them, you need to be mindful of your specific investments that you need to do in yourself to give yourself the best chance of cracking those roles. Now, in terms of the overall space, there are obviously so many Indian startups coming up in Bangalore, Pune, Gurgaon. These three are the large sort of startup hubs in the country. But there are also a lot of foreign startups who are looking at India today. Companies like PayPal are setting up huge bases in Bangalore and Chennai. In addition, there are unicorns like Stripe coming to India. So many scaled startups from the West are also looking for local talent to build their India franchises, and much of that action is actually happening now. So will be a good time for you to actually broaden your horizon and try to look for opportunities in those those startups as well. You need to spread your bets so that you have the maximum chance of getting into a venture that will be value accretive for yourself as well as for that venture. The last learning that I've had, and I come from Indian School of Business, which is for experienced professionals. So right on the first day, we were told that We do organize some campus selection, but it's not necessarily a core value proposition that we offer, because it is expected that you utilize this 1 year to actually do a serious amount of networking in the market, build your networks, try to understand sectors from the practitioners, and then try to narrow down on specific roles that you want to target. So best jobs post MBA are always secured by hustlers who go beyond campus arranged interviews, and they do their own networking, they do their own research before narrowing down on specific opportunities which they want to target via the networks that they have created. So I would strongly urge you to also, consider, while it is always good to, go for the campus interviews, but apart from campus interviews, you should definitely use LinkedIn extensively, set up a lot of coffee meetings with people, try to talk to as many industry practitioners as possible before forming a view on what would suit you best. And that will go a long way in creating a very exciting professional experience for you. So that was my presentation. I'm happy to answer any questions that you may have.
Okay, thank you so much. That was extremely awesome, insightful. I think the way you have put together all the facts of this scenario, the entire ecosystem, and urged students to kind of explore themselves, I think those tips are going to be really, very useful to the students. So my heartfelt gratitude to you for making it on this special day for us. And we are actually wanting to look forward to more guidance from your end. Because I think the motivation that you are able to provide, that is par excellence, and that is something which, as an institute, a young institute, we would want to cherish in future. So I would want us to, keep our doors open to you whenever you find time. You can come and visit us offline and offer advice and guidance to our students.
Sure. Thank you so much.
Thank you so much for being here with us this morning. Thank you.
Bye.
Bye. Yes, Shraddha, you can take over.
Sure, ma'am. We have the utmost pleasure of inviting Mr. Srinath Sridharan sir, who is co-founder of 4P Consulting Company. Before inviting him, let us have a look at his journey. Sir completed his BSc in Statistics from University of Mumbai and Global Governance from Bucerius Summer School. He is a member of Royal Institution of Chartered Surveyors. Sir has worked as a strategic counsel for over 2 decades with leading corporates across diverse sectors including automobiles, e-commerce, advertising, and financial services. He was associated with Vandavan Global Capital, which included executive leadership roles. Sir convened the Group Management Center, that is GMC, which worked towards enhancing business excellence and shareholders' value creation. As part of his role, he had board membership across housing finance, asset management, life insurance, and general insurance space. Sir's current professional position includes being a member of Closing the Skill Gap Task Force initiative of World Economic Forum. He is a member of advisory board for infrastructure sector at World Economic Forum. So now I would request Sir to share his perspective on the topic consumer empowerment and fintech.
Thank you. Good morning. Thank you, Shraddha. Thank you to the director, Professor Srivastava. And let me quickly, it's always a pleasure to come last after eminent speakers have spoken, because most of the statistics and the base that is needed to be set as context has been done. And I will take on what is a very, very critical topic. I also have another role, which is very critical role that I play as an independent director of the association, the Fintech Association for Consumer Empowerment. It's called FACE, F-A-C-E. And it is also, it is applied to the RBI to become the quasi-regulator. It's called self-regulatory organization, quasi-regulator to regulate digital lenders. See, all the fintech apps that you see which lend money, if Face becomes the SRO, it will become the regulator of sorts for that. And what does that mean to the journey? And let me present what does consumer empowerment mean? And I'll just share my presentation. All of us have seen technology eating almost every industry. I mean, if this is the global markets, if you look from 2006 to 2021, all the conventional Fortune 500 companies have been overtaken by technology companies. Exxon, which was so powerful, Citibank, which was so powerful in terms of its market cap. Today, if you look at it, the top 10 largely market cap driven entities are all technology companies. And that speaks something more about the ability to serve consumer wants and needs. A quick chart, which is a global chart, of course, how technology adoption, how quickly that technology companies are able to attract consumers. In exactly 4 years, WhatsApp could bring on board nearly 500 million people as its consumer. And if you look at the conventional offline non-digital businesses, just imagine trying to get 500 million people as customers. It's very, very difficult. The funding, if you look at the bottom left side graph, the funding that has come to startups globally has hit $156 billion only in the quarter. I mean, that's huge. And similarly has been the case with India, which is the comment that you will see on the top right in red font. The conventional financial services, be it the bank or the NBFCs, have been very slow to raise capital, whereas the private capital has gone to power new age startups. 1 in 5 venture dollars globally goes towards fintech. What does it mean to the conventional bank? This is what is happening to conventional finance and bank. It is getting fragmented. If you look at the top left chart, you will see that there are lots of balloons which are various different pockets of investments, lending, payments. It is all getting fragmented, and each of those pies are growing larger. Fintech again is becoming the home of unicorns. Almost 80% of unicorns are actually from the financing space. It could be lending, it could be insurance, it could be wealth management, asset management, it could be any of those, but I'm broadly bucketing it under fintech. What does it mean? Structurally, something happened in India in the last 5-6 years. Structurally, we went through the India stack. We went through the JAM Trinity, Jandan, Aadhaar, and Mobile Trinity. I call it, we have more keypad literate consumers than literate consumers, which could be your domestic help who's not necessarily educated, but understands how to use a mobile phone, a smartphone, to transact, to have conversations, seek media, entertainment, to, let's say, acquire knowledge, videos, audios, anything. And it is not the conventional literacy form. And that's a big, big mindset change, which is helping the digital ecosystem. Some names I've put, and by the way, this is probably just about 5% of the entire tech ecosystem in terms of names. What's happening is, there was a time you went into a bank to transact, as Shashank was also speaking about the neobanks and all those concepts. Today, all the financing can also happen through e-commerce player. It can happen through an offline partner. It can happen through an industry platform. Everybody is connecting every purchase to financing arrangements. What it means is the comment that I've written at the bottom of the slide. The fintech platform industries, which is valued at about $30 billion today, is expected to go to $84 billion in the next 3 years. And I think this number could be underestimated, depending on how we scale up and how today's union budget is going to come in case of any incentives for the tech platforms. I think this number would go drastically higher. Having said this, I just want to spend some time in looking at who is driving all this growth. Is it only capital? Not really. What I call the concept of GEMS. GE stands for gig economy, M for millennials, and the generation Z. So I call it GEMS. GEMS are actually driving this entire digital ecosystem. I mean, just for the context, 65% of India is less than the age of 31. And it's a big digital natives. Somebody like me is a non-digital native, which means until I grew up, I did not have access to phones, anything digital. 23% of Indian demographic is gig economy. If you thought gig economy is only about your Uber driver and Swiggy delivery boy, you're mistaken. Gig economy is also moving into the knowledge sector, consulting. It could be anything. So what it means is you're not necessarily identifying yourself with one single brand saying I work for somebody on their payroll. You're working with multiple people. The median age of 31 makes us one of the youngest nations globally. That also means that we're all consumers for the next probably 40 years for each of these platforms, not just about finance platforms. The youngsters, such as all of you, you're all in Generation Z, you are more likely to upskill yourself with vocational and technical courses. You have better access to education and employment. And the big generational shift is you don't mind spending. And that is why all those fintechs become important, because for you to spend, you're ready to live for today and pay EMI over the next 6 to 12 months. The previous generation, that's my generation or somebody elder to me, wouldn't have done this. Is it right or wrong? We're not talking morality here. We're just saying that it is an opportunity for businesses. Your generation is also spending a lot on lifestyle products, consumer durables, and jewelry. Having said that, each of you are aspiring to create wealth. 91% of millennials in most of the surveys have shown that they take their own decisions. More than 1/4 of millennials eat out once a month. I mean, just imagine business opportunity for each of these. Restaurants, delivery boys, everything gets finance. 56% of millennials investing in mutual funds. I mean, no wonder your $0 of the world will grow. 50% of investors in cryptocurrencies in India in the last 2 years are millennials, but we'll figure out how many actually of them stay. What does it all mean in terms of consumer empowerment and changing business models is this one. The consumer needs and wants are rapidly changing, and the traditional banks and financial institutions are very slow to change. The old concept of build versus buy, should I buy, should I build, should I do this technology, should I have a branch, is very, very old school. Today's fintech or tech world thinks about collaborating and compete, including collaborating with competitors. That's a big mindset change. That is because fail fast is the mantra. Can I learn from failures and build it into my system and keep going? And what does it mean in all this entire framework is consumers have choices. To me, the biggest consumer empowerment journey is when consumers have choices and, more importantly, the liberty to reject all of them as unacceptable. And I think that's the journey that we've been speaking about, financial inclusion for all these decades, saying that can we get financial product access to people? But the point is, it's not only about access. Is it the right product? Do they want it? Do they want something different? To me, that's consumer empowerment. So with this context, I'll now leave it open in case you want to ask any questions, and more than happy to take questions.
Simply fantastic, Mr. Sridharan. I think the manner in which face is going to actually become the new face of fintech. I think that sounds like a very out of the world concept to me. You know, fintech association of consumer empowerment, and I mean, trying to create a setup which is going to kind of go hand in hand with the changing demographic landscape. I think that's a superb idea. So I think I must congratulate you first of all for that.
Thank you.
Second, of course, you captured the essence of what we wanted you to target and to bring up the entire philosophy and the concept of fintech in such a beautiful way. So my heartfelt gratitude to you, sir,
Thank
for
you.
taking out your valuable time this morning. I know it's a busy day for everyone, the budget day. A very small token from our end, which we are
so
going to
much.
make it available at your residence. We'll find that out, figure it out. But I would prefer to have you come offline on campus and talk to our students and inspire them the way you have done online. Absolutely amazing, sir. Thank you so much.
Thank you so much. Much
Thank
appreciated, and wish everybody all the very best.
Thank you, sir. Trisha, over to you, please.
Thank you, sir. We will cherish your words and keep them in mind as we move forward in our journey. Now we have a great guest of honor, Mr. Nilesh Lele, sir, President Chamber for Advancement of Small and Medium Businesses, who will be sharing concluding remarks for today's conclave. So before inviting him, let's go through his corporate journey. He holds a Bachelor in Chemical Engineering from India's premier engineering school, UDCT, Mumbai, and an MBA from University of Oklahoma, USA. Sir holds a CFA and is a FRM charter holder and has extensive experience in field of investment banking. He has a varied experience in field of engineering, finance, strategy, and marketing. Sir is a serial entrepreneur with a successful track record of starting and managing businesses. Prior to becoming an entrepreneur, he has worked with various MNC companies in India and USA and was vice president in Barclays Capital. Sir is mentor with Startup India and on mentorship board of 4 incubation centers across India and is associated directly or indirectly with 50 plus startups across industries. We request you, sir, to give your valued views on topic new trends and fundings for fintech companies.
Thank you very much, Shraddha. First and foremost, I would like to thank Srivastava madam for giving me this opportunity, and also apologize for some login issues at the beginning. I'll try to keep it brief, try to keep it only for 10 minutes. Let me just share my. So I'm assuming I'm audible, visible, and my PPT is also seen by everybody. Yes, Shraddha, if you can confirm.
Yes, sir.
Okay, perfect. So we have heard to all these esteemed panelists, and I'm going to share another angle of opportunities that you as a student can pursue in near future, which is obviously going for your own startup. I have observed, I myself have few startups, and I've observed that the journey begins with an idea. And if you see all the startups that were discussed today, or some of the startups that are successful in today's era, and I'll give you a couple of examples, have a very well-defined problem statement that they have identified, and the solution that they have provided is also good enough and has a large enough market. So let's take Uber and Ola as an example, where it's not that taxi services did not exist prior to Uber or Ola came in existence, right? We all are in Mumbai. We know the Kali Pili taxis or the cool cabs. They did exist, but there was a certain problem statement in that existing model. You had to go find them. The taxi driver may say yes, may say no. He may overcharge you. You want to go to the airport tomorrow. You're nervous whether I'll find a taxi or not. So there were certain lacunas or certain problems in the existing models, something that Uber came overcome. You can sit at home and order a taxi. You know exactly who your driver is, what his rating is going to be, how much he's going to charge. Now you can even book it in advance, like for tomorrow 4 AM. So from this example, it's very obvious that one of the key reasons why they are as successful as they are is because of clear definition of problem statement and the possible solution that they provided. In the fintech world also, we are saying Paytm is a classic example. They're also at the right time at the right place, exactly during the demonetization where almost the whole cash flow had stopped. Digital payments, I mean, there was a time where people thought that people are so used to cash payments, people don't even use credit cards. How will we really go to digital payments, right? So they were there, right time, right place, and gave a solution which was amazing, right? And we all are actually using it. The other point to remember is that just because you have an idea doesn't necessarily mean it can be converted into a business. You have to create a business model out of it. It's being told that we get 50,000 thoughts every day. Probably 500 of those are ideas. So at least I can tell you from my experience, I get at least 500 new business ideas. But obviously 1 or 2 a year may actually get translated into a business model. So please make sure that the ideas, and especially the new generation, the younger minds, fresh minds, definitely we are getting a lot of different types of business ideas. Please make sure that you are able to build a business model around it, create a vision statement, create a goal, see whether there is a need. Like I also tell you, tell a lot of startups that whether the product or the service or whatever business you're going to do, is it a nice to have or is it a must have? So COVID has taught us that must haves are the businesses that are succeeding or are existing, right? For example, food is definitely one business, pharma, which are all must haves. Some of the nice to have businesses have struggled, right? And it's not necessarily wrong to be in a nice to have. I'll give you an example of cell phones where 20 years back they were nice to have, but today they have become a must have. So nothing wrong in being a nice to have, but hopefully it becomes a must have in your lifetime so that you are actually able to succeed and make money. Make sure you have worked out your costing. Is the cost to make a product or service, offer a service, and the pricing is the price at which you will sell it. A lot of startups, a lot of businessmen, a lot of technocrats, young mind students, many a times don't understand the difference between costing and pricing. Please make sure you take a look at it. Also understand the competition. Never be under the impression that there is no competition. There will always be direct and indirect competition. Like I'm in a food industry and I let's say I make beverages. Not just the beverages, other beverage companies are my competition, but even other food industry. Because remember, money, resources are limited. So everybody is fighting for that 20 rupees in the pocket of a consumer. So not just beverages, but bakery products or commodities, rice, or even vada pav wala, samosa, whatever. Everybody is your competition, right? Because everybody is targeting that resources, which I would like to call money, in the pocket of the end consumer. Similarly, success depends a lot on execution. Now we all know the models of a Oyo or an Uber or a Ola or a whatever, Flipkart or a Swiggy or a Zomato. But idea I would weigh only 20%, and 80% reason for success will be attributed to execution. So many people think I have this brilliant idea, means nothing, means 20%. Please work on actually executing it to the T. It's also important, unfortunately, in today's startup frenzy, people are chasing investors. Since I work a lot with startups as well as investors, I always guide them and try to make them think that you chase customers, be profitable at unit level. If you are profitable, if your customer base is growing, automatically investors will chase you. But if you chase investors purely, it doesn't guarantee you that customers will chase you, right? So chase customers, investors will automatically chase you rather than vice versa. So there are two key points I want to make today, which is why do people get funded, or what I call fundability. What is your fundability and of your business model? So before that, I'll also tell you how the mindset of investors work. So they look at how you have started a business. Have you bootstrapped? Have you invested your own money, your savings, your family, your friends? And who are your first round of investors? Because if you don't have your own skin in the game, how do you expect a third person unknown to you to invest in your business? Your investment could be very small. Let's say you have invested hardly 2 lakh rupees and you are asking an investor to invest 2 crore. That's fine. But he wants to see that you have invested in your own business, which means you trust, you have the belief that you will succeed. Very rarely I've seen startups at an idea stage getting funded. They want at least some proof of concept or some prototype or some traction, which proves that yes, this idea of yours is going to work, right? So it's very difficult that at an idea stage, unless it's really brilliant idea and something path breaking, it's very unlikely that a typical investor may fund or invest in you, right? They will need some proof of concept at least, or a prototype, before they can actually make a move. And we keep hearing about the likes, and I think the earlier experts also spoke about all these different fintechs, the likes of Grow or Cred or Razorpay or Paytm. But let me tell you, yes, there's a lot of investment happening, but hardly 1 in 40 or less than 3% of startups are actually getting funded, right? So it's not that everybody is getting funded. No, really the good ones are the ones that are getting funded. So you need to know whether you will get funded, and what I call it the fundability report, or how do you see whether you're fundable or not, is something I ask 5 questions. And these are the 5 questions you need to ask yourself, your startup, because you're going to be the first investor in your own business. You're not just going to invest your money, but your time and effort. So always look at your business as if you're the investor in that business, right? So if you're not going to invest in your own business, how do you expect someone else to invest in your business? So these are the 5 questions you need to ask yourself for you to be considered as fundable, right? So first thing is, most of the investors are looking whether you are an industry leader or a first mover or some innovation. At least some incremental innovation needs to be there. If you're a me too high kind of a person, like already hundreds of such products are there and you are a 101st one, it's very unlikely that investors are going to be too excited to invest in you, right? So at least some innovation, first mover advantage, industry leader is important. Secondly, whether you can maintain that competitive edge, because once like let's say Uber came in, then you have Ola, then you have many other who have tried to come in, or even a Paytm, then there are many others who have tried to come in. But can you always maintain the competitive edge? Like Facebook is another example. It was the 7th social networking site. Prior to them, you had MySpace, or my generation grew up using Orkut. But Facebook was the one who was able to maintain the competitive edge and was always ahead of the competition. The third key thing, and that's why if you see most of this fintech getting funded, is the scalability model. So if you can have 1 customer, you can easily handle 1 lakh customer. You can easily handle 1 crore customers. So highly scalable model is something that investors get more excited rather than a typical brick and mortar or a slow scalable model. Fourth is whether the business will actually make money. And fifth is whether this entrepreneurship team will make money or make money for me or grow my money, right? So these are the 5 questions. I'll quickly repeat them. Whether there is some innovation, you can maintain that competitive advantage, whether the startup is having a scalable model, whether it is actually possible to make money, and whether this team will make money. So introspect, ask these 5 questions to yourself before you get into whatever startup or whatever idea that you may have. And there are 2 key reasons why startups really need funds. One is because the profits that they are making, what we call internal accruals, are not large enough for them to fuel the fast growth. And that's why they want external capital so that they can grow at a much faster exponential rate, right? And that's why you keep seeing all these, like recently also Waycool or Delicious or Fresh to Home. So many of these startups have gotten funded is because their internal accruals, their internal profits are not large enough to give them the growth that they want. And that's why they want external funds. Or 2, you are in a what is called a burn model, which means your expenses are more than your income. And it can happen in the early stages of your startup because you may have your sales and marketing costs might be higher. There could be some development costs, some manpower costs, which a lot of these startups are in, right? They are actually spending more than they're earning, which is okay because you're trying to acquire the clients or you're acquiring the competitive edge. So in the burn kind of a scenario is the second scenario where typically the funds need, the startups need fund. And finally, I'm sure after listening to this, you must be excited. You are like, okay, I would like to get into a startup, but then where do I raise funds? In fact, we had the director from Aavishkar Capital as well. So he's the one you need to connect with in case you want to raise funds. Or there are many other angel investors like rich people, in simple words, or VC funds, or even what I call family offices like Harsh Mariwala ji from Marico. He has his own wealth being managed professionally. A lot of them have Tata's, even the Infosys founders, they all have their family offices and they typically invest in early stage startups. VC funds also invest in early stage or slightly later, like Series A onwards. Then there are a few impact funds where in case you're working on what we call bottom of pyramid, so at a lower strata of the society, if you're working, there are certain funds who are ready to take lesser returns, like the likes of Dutch Good Growth Fund or an Asha Impact Fund. And then there are some private equity funds also who are looking for are ready to look to invest in startups or in a slightly mature companies. This link here on the sumhr.com blog, it lists out all more than 200 plus VC funds, a large list of family offices and PE funds. So if you want, you can take a photo of this, or I can share this PPT with your with the director, madam, and you can go on this website and find out the list of investors who are looking to invest in startups. So with that, I would like to once again thank the organizers for inviting me, and I hope that I've been able to enlighten your students here in the area of how to raise funding, where to raise funding, why startups get funded, what is the fundability, and so on and so forth. So with this, I hand it over back to Ms. Shraddha.
Yeah, before Shraddha comes in, I would like to snatch this opportunity to thank you for your wonderful coverage on how to fund a startup in this area, this wonderful industry, which is, I think, one of the sunrise sectors that everybody has said since morning. I think, the best part about your session, 3 keywords that I captured. One is fundability, sustainability, and scalability. So to me, if these are the 3 things that are taken care of by the younger generation, those who are listening to this program, I'm sure if they have their eyes, their focus on the right targets to be met by them, then finding somebody to fund your venture may not be a distant dream. That's the way I was able to capture the essence of what you said, and looking forward to a lot of guidance and support from you and your chamber, which is a very unique chamber, a chamber which is looking for advancement. That word actually hit me because I don't see, anybody using that word that often. Advancement of small and medium businesses. So, I mean, that's something which has actually attracted my attention. So I must compliment you for this wonderful session. So thank you so much for your
very much, madam.
Insights.
Yes.
Thank you.
Thank you.
Thank you, sir. We thank you immensely for your time. Now we have come to the end of what we has been an extremely enlightening knowledge event with all the talks and discussions on a topic issue of immediate relevance for all of us. And I'm sure I speak for everyone when we say that it has provided us with a great deal of food for thought for going forward. May we invite our Professor Mr. Vinay Tiwari sir to propose a vote of thanks.
Thank you, Shraddha. It gives me an immense pleasure to propose a vote of thanks on the occasion of Finance Conclave 2022. First of all, I would like to thank our Honorable Chairman, Sir, Sri Harishchandra Mishra ji, Trustee Sri Ashish Mishra ji, and Aditya Mishra ji for motivating us to organize this type of event. Second, I would like to express my sincere thanks to our Director AIMSR, Dr. Sunita Srivastava, Dr. Manoj Bhatia sir, Director ASBM, who are the main pillars behind this program. I should mention the deep meaning of appreciation to the esteemed speakers for their explanation, excellent coverage regarding the fintech industry. I also want to thank the people who worked behind the scene to execute the event, our IT team for making technical arrangements, non-teaching staff for providing all the logistic supports. I would like to take this opportunity to record my heartfelt thanks to all my faculty colleagues for all their support and cooperation wherever and whenever I needed them. My deep sense of thanks to two beautiful anchors, Shraddha Mishra and Trisha Shah. And I would like to express my gratitude to all my dear students for attending the event, and appreciation goes to all other participants who were attending this conclave with a great enthusiasm and today's event and make the today's event a great success. Thank you everyone. Thank you very much. Over to you, Shraddha.
Thank you so much, sir, for your. Thank you all of you for attending the event.